All right, everybody, welcome back. So you can see, oh shoot, I'm on the wrong account. All right, let me log off and log on to the other account. Going to be looking at a trade here. We're trying to get more videos out of live trades being taken. And as usual, we want to make sure that we're actually looking at a live account, right? None of that paper stuff. Look, there's nothing wrong with a paper trade. I'm not saying that, right? But when we're talking about really putting on a trade, it should be a real trade. When I post trades in, the options, stock, futures, whatever, it's a real trade. It's a real account, right? It's live money. It's not paper money. Unless I specifically state that I'm posting a paper trade, then it's a real trade. And there are times where I have posted a paper trade. So you see, I just logged in. I am live. It's the live account. We're looking for a short here. We are way overextended past the 50 on the 1 minute. This is where the market opened this morning. Boom, 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 boom. We're back to the open. That's been a rejection spot before in the last few days. It is an institutional pivot point. We do have the Globex from the overnight hours. We just took a hit on that. I was thinking 42 was the short, but it took a little challenge past that. And since I wasn't logged in on the live account anyways, I had to come back over and get logged in. Then I missed my entry. So we're going to be looking here for a place to go short, and at the very least, just run it back down to the 50. I don't think we're asking for too much. And what we want to do is get risk out by the time we get to the 50. And that way, if we happen to break through it and continue to move lower, we're still in it. We just have risk out, right? It's been a nice run through the morning. I didn't get that run. I was busy, so I didn't get to trade it. Let's look back and see what a break through the 50 might look like after such a beautiful run to the upside. So that was a pretty good run to the upside, and see how overextended we are there, right? Like that. And then it came down and finally broke through that 50. It took a little while to get there, of course, right? Markets don't move in a straight line. Same thing here on the other direction. We were extended away from the 50, tagged it, broke through, but dumped. And then finally, we started to cross over, worked our way back up, right? So we're just looking for an example of that kind of trade logic. Look how straight and clean that is, just like straight and clean to the downside this morning. So I missed my entry. We're going to look for that to show up, and I'm just going to pause the screen for right now, so you're not just hanging out with me in the recording. And when we get another shot at getting in along the top of that range, that's what we're going to try to do. We are building a topping pattern, right? You can kind of see how the market is not really, we're getting those higher lows, and we did get a little bit of higher highs. So it is trying to get there, but this really looks like we're done. We're there. We're ready, right? We want to see that move before the 50 ends up getting too close, because if it is going to bounce play against us, we won't have very much profit factor there, right? So like I said, I'm going to pause it here, and I'll be back if we can get a short. All right, we're back again. So a little push to the upside. I wanted to do a follow-up on why I didn't take the trade. We were really overextended past that 50, and things were looking great. But as you can see here, the 50s had a chance to get caught up with us, so we're not as overextended as before. Now we're looking more at a situation that looks like that, right? And we are still pushing against that far side. One of the good things about missing the entry that I did miss so far is we're starting to get this ugly little head and shoulders pattern showing up. And we are getting that test on the 50. The test on the 50 is not exactly where the neckline would be. And like I said, it really is an ugly head and shoulders. It almost isn't even drawable, right? Except, there's like a left shoulder head. We could see a little bit of a right shoulder. The thing is, at the moment, if I had pulled it back to like that part way back there, we could have made the same argument when we first were getting that challenge on the head and shoulders back here, right? Like we had the left shoulder and the head, and that didn't plan out back then either. So, at this point, the overextension past the 50 is no longer in play. We've already came off of that high. It wasn't very much after all. By the time the market made that last push, the 50 had already caught up with us. Back here, we had a much greater risk to reward opportunity, right? But up here, there really just wasn't as much benefit. The next thing is when we're focused on structure of this range back here, right before the open. One thing I do want to mark is the open, literally the open, today's open session. We just kind of zoom in there a little bit, right? You see, now I'm in a different time zone than the market. So the open for me is 8:30, not 9:30. And we do want to draw that line right where the market opened and then turn that into, a line, right? And that's going to mark us across the screen so that now when I zoom out, you can see that we are through the open. So we're above the open. Now, where's the Globex levels? So, well, if we came back here in the middle of the night and kind of looked at where we started in the Globex, it was way up here. So we had fallen quite a bit and we're trying to reclaim all that, but you can see how we're not even close to that Globex level or the Globex highs. Those are still quite a distance away. We want to watch this 50 be resolved. I would love to have gone ahead and got a trade off those highs, but the risk reward just wasn't there. All right, so kind of waiting for it. And if this is going to be one of those ugly head and shoulders, we should see one more pop up, right? But oftentimes the right shoulder is lower than the left shoulder. And that may be all that we get right there. I just don't think so. I think we're going to get maybe one more chance, right? To kind of get in somewhere between 41 and 42. If I'm wrong and it just starts to dump, well, okay, we can, maybe try to catch the flip when it pulls back, right? So right now we're just kind of waiting on that 50 line to see, this thing could bounce that 50 and break and just keep on running. I am looking on another screen at the SPX. Let's kind of bring over the SPX. This isn't the screen that I'm watching, but it'll do. So here on the SPX, you can see how we got to the open and rejected off of it. So the SPX is not above the open. The ES is, but the SPX is not, right? And on the index, you can see that we're well above the open, but we never got above yesterday's close, right? And of course, we're here. We may as well look at it. The NQ, well above the open, but not above the close, right? So that's what we're looking at. That's where we're at. We broke that 50 here on the ES. It really does look like we're going to get our short opportunity. Still looking for that pullback. If this is going to be a high momentum play, we may not get that pullback. In a high momentum play, we have to sell low and then buy back lower, right? Because it may not pause and give us that Busby that we want. We may not get that pullback. So there is the start of the break. That's the first break of the 50 since 11:45 this morning. And to match the time frames, I really mean 10:45 this morning, right? That's the first break since, 12:45, because I moved time frame the wrong way. So for me, we haven't crossed since noon. For the market, we really haven't crossed since around 1 o'clock, and that's almost 2 hours ago. 2 hours holding above the 50, a beautiful run up. We missed our entry off of that high. So, right now we're just looking for a pullback to sell the rip. This was a rip. We want to sell it. The phrase is called sell the rip. Because usually, it's buy the dip and sell the rip. And that's what we want to do. We want to sell that rip. But I don't like jumping in on the lows, right? I don't want to get in on the drop. I'd rather catch it on a pullback. Why is there likely to be a pullback? Well, I mean, I'm going to be aware of the trade, so I'm not going to get too deep into that. But linear regression and mean reversion states that when you get an explosive move, you very often get that pullback, right? We're getting that explosive move now. So we want to be prepared for that pullback. And I'm thinking that 46.3475, or basically 46.35, would be a really good place to catch that to join the trade and go short. Look at every one of these moves. In isolation, it may have felt like, oh man, it's running away without me. I've got to get in. And yet look at that breakout. It offered a Busby. And then look at that breakout. It offered a pullback, right? Even on that big monster breakout, it offered another pullback. So every one of those, if you were patient, offered an opportunity to get in. But if you got in on the breakout or tried to chase it, then every one of those offered a really bad risk reward scenario, right? You can kind of see how, like, when we broke out there, it offered you an opportunity. When we broke out there, it offered you an opportunity. Even when we broke out there on that pullback and that whole little run, it still came back and offered you an opportunity. Same thing here. Same thing there. See how it just kept letting you come and join in? So now we're getting this move. We kind of consolidated here and it's breaking down. We're looking for it to let us in. Now, it may not really let us in more than that right there, that 30 line. That may be all we get. But I'm going to be trying to get in right around in there. Do I got a lot of scribbles on the chart or what? All right, we got that out of the way. So there's our first pullback since we broke that blue line. And I want to change that blue line because once I get in, my machine is actually going to draw me a blue line like that showing my entry. So I'm going to change it to red, just a different color, right? Because I don't want that color to mistake you from where I'm really in the market. I'm going to widen this out a little bit just so we can see the volume a little more. I'm not really going to worry about stacking and pulling at the moment, so I'm going to turn that one off. And we want to look at the liquidity here. And we can show the liquidity on the chart. But I think it may just get blurred inside of that daily volume profile. So you see if I zoom in, there's the liquidity, but see how it's in that volume and we really can't see it that good. It's not really helpful, right? So there's the little bit of a pullback. This may be all the pullback that we get before it makes its next move lower. I'm looking for, a reasonably decent pullback. I really want that red line. If I can't get it, that's fine. We'll try to find another one, but I don't want to jump the gun. If I'm not going to get this red line, it needs to prove it. Now you see that big bar right there. It's 200 orders at 46.33. There's a lot of sellers sitting right there. And these buyers, they're looking for liquidity, right? If I'm a big trader, I know that there's a lot of liquidity right there. That's the target for me, to accumulate a lot of position size. Because remember, those institutions, they're not like us. They're not trying to pinch a penny, and get in with a stop. And they're not doing any of that stuff. They're trying to find liquidity. Where is the liquidity right now? It was at that 33 with that 100 and something contracts. So there's our good, clean pullback, a deeper pullback than we should have seen if we were just aggregating data. We did get a pullback here and some pullbacks there, but this looks different. We're underneath the 50. We're going to try to go ahead and get that entry on. And a little low. Try to bring it up. There we go. Now we're on the line. We're going to catch it right on that institutional pivot point. And you can see I don't have a very big trade here, right? It's 1 point. I'm in the micros. That's $5. I can make it a little bit bigger, but $5 is fine because we're not really making big exaggerated moves. That should do it. If I get stopped out, we'll, reevaluate. I want that off the dome. So I'm going to go ahead and just get that stop out of the way, do it manually. So I had a 1 point stop on, but we did find a little bit of liquidity at that pivot point. So I went ahead and re-entered, and I'm going to move the stop back a little more reasonable in its distance. Now, there's two ways to talk about the stop. One is a dollar value, saying, well, I don't want to risk, more than $10, whatever your dollar value may be. The other way of looking at a stop is thinking about the market and what you can hide behind. So we know that we have this structure right here. One good way of thinking about it is that if we are bearish, right? If the market is as bearish as we're supposed to be, then this structure should stop price from that march to the upside. And then there is the high, right? That high that we set earlier. Now, that high is way too far away from me, right? I don't want that kind of risk. But there is an argument that could be made that the top of this box should perform some form of structure, provide some resistance against a market continuing that move to the upside, right? And from that point of view, perhaps it's not a bad idea. Now, one thing to think about is after this trade is done and we go in to journal the trade, if I had waited for the candle to close, for an example, would this trade have even have happened, right? Because you can see how the next candle was just so violent. There was so much liquidity coming through as we broke through. If I had waited for that candle to close, the one that came up and hit that pivot point, would I have actually opened the new trade? And the answer is, probably not. I'm a pretty cautious fellow. I probably would not have entered. I would have waited, and then I wouldn't be taking this kind of heat. Waiting for candle close does not solve the world's problems, right? Like every trade that you have wouldn't have been a better trade if you wait for candle close. But there's a good argument that says if you wait for candle close, maybe a lot of times on the trades that you did end up losing, you would have never gotten into them because you would have recognized at the close of the candle that maybe you didn't want the new trade after all, right? But we're in it now. You can see that we are retesting again, and we knew that this pullback could get a little bit rough. It was the first time that we had broke the 50, but when we had scrolled back here and we had looked at other times when we had broke the 50, it wasn't just like one clean shot, we broke the 50 and down we go, right? It doesn't work that way. Generally speaking, we break a 50, we come back above it, we break it again, we're struggling with it, like right in there. And the market just really has a little bit of a time trying to make that overall conscious decision of, well, what are we going to do now? Now, you can look back and always find these really beautiful examples where price breaks that 50 once and just falls like a dog, and it's all beautiful. And then, of course, when you try it, it doesn't work, and you say, oh, man, what happened? Well, look at the break here, for an example. We broke the 50, kind of challenged it a couple times, came back through it, challenged it again, and then we finally got underneath it. So there's really two great examples right there of what it looks like to break the 50, a real beautiful clean break, and then a nasty choppy break. So, having a little bit of a conviction on, well, what is the trade supposed to look like? And if it was failing, suppose that we're just completely, absolutely, totally wrong about the trade, what would that look like, right? Would it get a chance to retest and validate against those highs? Or would it be, just one clean break and we dump and everything is great and, rainbows and sunshine? Obviously, I'd like the one clean break and everything is gone. That's not what we have. Is the trade still viable, though? That's the next question. We got a little higher up there than I would have liked. We have to be able to point that out and say, if this was a good structure and we were so bearish, how come it made it so far up in that pullback? Not a good deal, right? So we got to recognize the risk signals when they are there. And look right now how the loss is so low. Now, this is usually where people begin to make a mistake. They held through all of that and they decide, oh, I'm so close to not taking a loss now when I was looking at a pretty good size loss. Let me go ahead and get out. Well, you tolerated all of that risk, right? Don't get paid for it now, right? You were willing to take that risk all along. So let it play out. Don't decide now, well, I was going to get in on the bounce. It didn't do that, but thank goodness it came back and let me out. I'm going to get out. You could, if you really decide that this trade is wrong, right? If you make that conscious decision and say, you know, I went short here. I really don't think we're short anymore. I'm going to use this opportunity to get out. Then yeah, by all means. But tell me when you do that, that you're also thinking, how am I going to go long now? Because if you thought you were wrong going short, you should also think that you're right going long. So we're just kind of hanging out here. I'm going to go ahead and hit the pause button again because we don't know how long it's going to take to either begin to work or not. And I'm trying to keep this video from being just, you know, an hour long spiel. I'll be back, guys. All right, so we're back again. It's still the same trade, right? It's still a live account. It's still doing what it's supposed to do. It's made back that silly little 1-point loss. There's a decision to be made right now, right? We need to move the stop, but a lot of times if you move the stop too soon, you're just going to get wiped out. And I don't have an actual stop on yet, so let's just first go ahead and do that. I turned off the bracket so that I can put the stop on, and now I have a buy stop order, and it's a loss if I was to get hit up there. See how we're breaking structure here to the downside? We're breaking below that 28. So that if we close below that, I'm going to go ahead and bring my stop down into this green area. I don't need to do that yet because, you know, right now, either way it goes, my stop is fine right there. What I'm worried about is sometimes I'm a NASDAQ trader, and what you'll get is this very sharp, very steep, very fast move that stops you out. And I've learned to just wait for that candle to close behind or around or on the other side of structure, right? So we're below this right here. And if we close below that, I'm going to grab my stop and bring it down. There we go. So we just closed below it. I'll just bring my stop down a little bit. So that's the $5 right there, right? It's $5. It's nothing. The trade is up right now. We're up to $45, right? We're just letting it unfold. We could look to add to the trade if it continues to set lower highs and lower lows. It's proving us right? We're going to go ahead and put a little more profit on that stop. It's a 2-point stop right now. So two points, $5 a point. That's $10. That covers my commissions on both of those trades so far. If I was to get stopped out here, it would basically be like I didn't trade at all today, right? Because we had that first trade that was a loser at $5 and then the commissions to that. So maybe a little bit more, that ought to do it, right? About right there. So if this is going to continue to move to the downside, showing us lower highs and lower lows, we want to think about adding to the trade, right? When we're in a good trade and it's going really well, we don't want to just sit there smiling like an idiot. We want to think about, well, how can I add to this trade? It's literally telling us you were right. You went the right direction. It's doing what it's supposed to do. We want to add to that, right? What else can we do? Put more money in it. What we want to put in, though, is a way to risk just the profit here. We don't want to risk any capital in our account. So we're going to let this candle close, and we're really going to be trying to see if it pulls back into that red bar or that red zone that we're in. Now, if it does pull back into that area, that'll be around 29. You can see if we were to enter around $29, we would still be up around $30 in profit, right? And if we were to do that, we could use that $30 of profit as some of the cushion so that, if the trade still does lose, then we didn't lose anything out of our account. We just lost additional profit that we could have made today, right? And that moved while I was talking. Kind of just want to let it unfold a little bit. This is the pullback that we were looking for, and it's looking good. Everything is going just fine. We just want to kind of time it out a little bit. And you can see we're a little close to the stop that we already had set. So, if we add it in now, our break even would be brought down quite a bit. That next candle is going to tell us a lot, right? And it looks like it's coming after me. Very likely it's going to stop me out at this point. We're just getting too much flow. Now, one thing we could do is grab that stop and back it up a little bit more, right? And the only thing we're doing is giving away profit. We're not putting any capital at risk by moving that stop back. So if we're worried that it's going to stop us out, if we still believe that this is a good trade, that we should be short, and we don't want to have to try to enter yet again, then we could try to bring that stop up, get a little farther away from price, and give it the room to prove us right. Right? I don't want to move it back any more than that 33, because from the first trade that I took, that was the 5-point stop, and then commissions on 2 trades, this would cover that mostly, right? Maybe I'll be down like a 25 cents or something. Still looks like it's going to stop me out, and that's going to be a wrap right there, right? But hopefully you guys got something out of the video. You seen where I could have definitely closed it down here, had a profit on the day, no big deal. So it did stop me out. I ended up with 11.25 in the P&L. Yay, I made $3.81. But one thing, the original trade, that's gone, it's covered. So it's like I have no loss on the day. The second trade, this one, it didn't quite work out because I was wanting to really run this back down on the day. And, we got stopped out, but I wasn't really willing to risk anything else at this point. Now, before I wrap up this video, one thing I do want to say, if you are never willing to really take that risk, then you're never going to actually get any really good profit, right? That's a lot of reallys. But follow my logic here. If you tolerated the pullback that I tolerated here, then you had already made a statement that says, I'm willing to take that kind of risk. Rather than moving my stop up like I did, and then not moving it, refusing to move it, as a matter of fact, and letting it stop me out, I'm making a statement that says I'm no longer willing to take the risk that I was taking earlier. Now you can see if I had just let it play out, if I had kept my stop above my entry, I would still be in this trade. I would still be looking at a profitable trade, probably be getting back down into the 20s and $30 profit range. But once I made a conscious decision that I was no longer willing to accept any risk, I also gave away my chance for any profit. You're going to find that answer on a lot of trades. If you are unwilling to take that kind of any risk, then you're just going to be really unwilling to take any rewards. That's what I got for you guys. I appreciate your time, and I look forward to seeing you at the next video.